Hello everyone. Happy New Year 2023. Thank you very much for stopping by. Welcome to the weekly market analysis video based on market profile as well as the candlestick pattern view. Let's get started of what happened and what could happen for the next week. So last week I had posted that the Santa Claus rally is delayed and that it is about to come. On December 30th I had posted a video that above 38.54 it's going to be bullish. So as you can see, above 38.54 we rallied pretty big, almost 50 points, and then formed a poor high and then opened with a gap up on Wednesday because Monday was a holiday due to New Year's Eve. So this was all the overnight price action where we hit all the upside targets above 38.54. And then so this is a Tuesday's regular trading hours profile. We had opened with a gap up compared to last Friday's close, and then we had formed a B profile. We looked below the 3-day balance, but then we closed back within the balance zone, and the key level that we had for last Friday was the 38.54. Below this we want to stay bearish, so it worked out pretty good. So this is the overnight session of Wednesday, and then this is the Wednesday's regular trading hours profile. As you can see, we had gapped up on Wednesday again, but traded within the Tuesday's range, fully within the Tuesday's range. However, on Thursday we had gapped down, but still trading within the previous day's range. We formed a D profile, which means pretty balanced distribution near the 3-day balance low, which means a lot of buyers were there on this distribution. And today on Friday, we had gapped up, retested the prior close, which means Thursday close, and then rallied up straight. We hit all the upside targets that we had projected in the last Friday's video, and we ended up closing just slightly above the 3-day balance high that we had, because we looked below the balance on Wednesday. Not my bad. Yeah. On Tuesday we had looked below the balance, but we closed within the balance, so the target would be the other end, 39.12, which we hit today. Almost 100-point rally from Thursday's close. So what's up for next week? For next week, as you can see, there are a couple of single prints that has formed, and a few weak levels are also there, where there was no print at all, which means it was an emotional rally, short covering rally. Let me explain a few nuances. So starting with the low of the day, it was exactly from the settle of Thursday, so that's why I marked it, and there was no print at the B period, which means, let me zoom in, you will see that there is actually no print, no alphabet below this opening of the B period. So that's why I have marked it. And then there are some single prints. Single prints means in between the TPOs, in between different alphabets, if there is no covering, then you call it single prints. That also indicates there is a short covering that has happened. If it happens to the upside, then it's short covering. Then if it happens to the downside, then it's generally impulsive selling, like emotional selling. So there's a couple of more levels that I have marked, like no print JLO. It's similar to what I've said on the B period, that there is no print. Here also there was no print. Let me make it bar chart, like expand the bars, and no print there. Let me make it a merged profile view. Yep. So we essentially closed almost near the high of the day with a huge short covering rally. So what's up for Monday and the following week? So if we get a close, the daily close back within the balance, which is the 3-day balance zone, then the target would be the other end of the balance, that is 3822.25. So keep an eye if on the daily close if it happens below 3912.5 or not. But in general, for next week, the non-excess KM low 3913 would be the line in sand for the downside. So below this you want to stay short or take puts with the option position, and above the high of the day, that is 3928, you want to stay long or bullish, and these are the respective targets. On the upside, there are a few single prints as well that we haven't filled yet, and also there's a gap. Yeah, that's about it based on the market profile view. So let's jump into the candlestick pattern view. So the candlestick pattern view, let's start from again a monthly approach. Like start from the top down approach of monthly. So let's start with the monthly chart. So the year just started, so January candle is fully within the last year's December candle, so the trend is balancing on monthly. And then let's go to weekly. So on the weekly time frame, we have traded above the prior week's high and closed above as well, so the trend on weekly is bullish. Then let's go to daily chart. On the daily chart, the trend is bullish as well because we traded above the prior day's high and we closed above it, so the trend on daily is as bullish as well. So that's about it, guys. Thank you very much for watching. Let me summarize again. So below 3913 you want to stay bearish or take puts based on market profile view, and then about 3928.75 you want to stay long or buy calls on the indices like S&P 500 futures, like SPX or SPY, or even ES for that matter. So all this analysis is based on the ES futures, as you know. So that's about it, guys. Thank you very much for watching. Stay tuned by subscribing, and if this video helped you in getting a little bit more understanding or helping you manage your trades, please give it a thumbs up and share it with your friends. That would help me a lot in spreading the word and sharing the knowledge for free to everyone. So thank you, and a happy new year to you and your family. Bye bye, take care.